Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 22nd of March. Right now, I'm just looking across the markets here and, seeing a bit of repetitive, news and things that are moving the market. Looking at across the board at the global markets, and I'll show you those in a second. But it's becoming a lot clearer to me what I need to be focusing on, and possibly what you could be focusing on as well, for looking for where the easiest trade is. Now, obviously, there's been a lot of, central banks sort of coming alive, talking this last week of the month. You get a lot of central bank officials from all of them pretty much coming out saying, well, this is what we're doing. This is what we're anticipating. It's like a bridge between the core data, which comes out in at least the first 2 weeks of each month, if not the first 3. And then you get the connection between the central bankers trying to connect that data and pushing it forward to the next round of key data to look for, right? This is how the fundamentals connect. But, there's a consistent removal of trying to impact Russia, right? S&P says it will withdraw ratings on all Russian entities. There's that sort of still push goes on. Well, what's the ramification for that? Well, it's a little bit hard to sort of see on the face of it. Equity markets don't seem to like it. But they also don't like the fact that the US Federal Reserve Chairman Jerome Powell is talking about very hawkish about interest rates. Now, we had one of our traders, Brent, talking about this the other day. What about QE? They should be pulling some QE out whilst they're doing this, because otherwise it's like an artificial thing. They're chasing inflation when they need to be pulling cash out of the market. They probably don't want to pull cash out of the market because that'll impact equities quite dramatically. Right. And that's the sort of key piece that we're waiting to sort of fit into place. When will they start reducing QE? To me, if the inflation gets away from them, I mean, they've got to start doing it at some point. Anyway, that aside, let's start to sort of think about, and this is what trading's all about. This is what the guys at the banks are doing all the time. They're trying to work out where the easiest trade is. Right. So whether you're looking at, say, US equity markets, you've got the the mainstream US equities during the day. Then you've got the US equity futures, which tells us what's going on once that US market is shut. You've got the global equities over here, Australasia, Asian and European equities. And then you're looking at, say, the currencies, commodities. And then you've got some other aspects, risk on, risk off, safe havens and the oil trade, these sorts of things, as well as the cryptos, right? Where's the easiest trade here? And sometimes it can be quite hard to work out. Now, but let's bring it over to the charts. What I like to do is this is what you get from analyzing the markets each day and looking at the key drivers, right? Some of them are geopolitical, like the Russia-Ukraine issue, putting a huge amount of pressure on oil, etc. Others are coming from central banks. The central bank ones are the ones we can hang our hat on, right? They tell us a lot more about what's going on. Now, this set of charts here, it's just a cross spread of the financial markets, okay? So the dollar index tells me here that the dollar isn't really doing anything, right? So potentially trying to trade the currencies here right at the moment is problematic because the dollar's not doing much, right? Nor is the biggest trading pair euro. Now, it's come back and tested again. That's fine. It's dribbled off a little bit, but still it's not really going anywhere. Now, the volatility index, right, it's back down to 23. This tells me that the market is completely comfortable with everything that's going on, all the uncertainties in the market at the moment. They're like, we've got a grasp of this and it's working out for us, right? The continuation of the Russian-Ukraine issue has kicked oil back into the top side, starting to get towards an overbought situation. But I tell you what, it's nothing to control that. This is going to be the outcome or outlook for oil is definitely attached to the Russia-Ukraine issue. So you can be watching that quite closely. And this is one pair that I would be watching, or one instrument, right? And, as I showed you on the data page there, the oil trade, it's connected to, say, you got Light, Brent, you got the dollar CAD as well, CAD yen, and even maybe some of the big oil companies, Chevron and Exxon, who once again had a pretty big day to the top side. Now, we come back and have a look here. Yeah, that's great. We've got these equity markets, right? They've had a massive rally ever since Donald was in power. They've come down. the S&P tested the 200-day moving average. It's now a little bit higher. Nasdaq's done a better job of bouncing back above that 200-day moving average, which tells you it's like in a bearish move, and it's now sort of corrected that. Is it finished yet? I don't think so. And I'll come back to that, because these, like the equity markets, to me are one of the key areas, the easy trades, right? Because we're getting reference from the central banks directly that's going to impact those indices. Now, Bitcoin, well, it's sort of sitting on the sidelines at the moment, just trading sideways, not doing too much. So I'm not getting myself all bent out of shape trying to work out what's going on there. And I'll show you the other charts in a second. Gold, well, I'll tell you what, it's sort of just banging around, has been following oil for some time, but it's very hard to quantify your risk when it's up in the middle of nowhere, right? What you can see at the moment is we had the safe haven move, okay, above whatever it was, 2050. It's moved back down here, and it looks like it's found fair value. We're waiting for the next round of news or events to see whether this thing goes up again, if there's more, carnage in Europe, or if that settles down, we might see it lower. So to me, oil is a major player with the Ukraine-Russian issue, and the equity markets should definitely be on your radar, because the Fed is talking, right? They talk hawkish, it comes off, right? Equity markets come off. If they're dovish, which they're not at the moment, then it would rally. So just having a look here, just to give you a whip around. I mean, here's euro. It's not doing a hell of a lot at the moment. I still am bearish euro overall. Sterling, very tricky trade down here at the moment. Aussie, just dancing around that resistance level. Once again, these charts are not changing that much. If anything, as I said, you've got a potential move here. Dollar CAD, it's come right back to that daily trend line. And if oil continues towards 130, right, well, then it's going to put downward pressure on dollar CAD for sure. Dollar yen, well, it's up in the boondocks. You've got dollar Swiss above that support, and the dollar index. So, but there's not clear and defined impacts on these currencies, right? It's because of, you've got the geopolitical situation in Europe. You've got central banks doing all different things, amongst other things. So there's the easiest trade outside of euro. I don't think it's really there, right? One thing is, when you look at the equity charts, they are a dog's breakfast, right? You've got these big rallies that have been hit by the recent falls. Now, it's very hard to use these. I've got these orange trend lines, which tells me they're weak support trend lines. They are pretty tough to get your head around, because it's like, technically these don't look good. But one aspect is, with the central banks, in particular the Fed, right? If they're hawkish and they're talking about higher interest rates, you got to think the US equity markets will move aggressively first, and they impact all the other equity markets. So to me, if we do have a central bank, especially the chairman, talking, then I'll be watching very closely what's going on with the equity markets, right? And I've got an equity page here. You can see what's going on in the US equities, indices, the futures, okay? One key aspect looking at here, the year high, low, and range, they've still got a long way to go, right? There's a sea of red year to date, but it's not as bad as it was. But I tell you what, I reckon it's going to be a lot worse, because once again, if you're trying to connect the overall fundamentals, the Fed, they're telling you they need to raise rates. They've got this QE, they need to pull that out. Something's going to give. Everything smells terrible for the US equity markets. And we had those relief rallies, which were put down to basically a potential Russian-Ukraine deal being done, right? That's just fictitious. It looked like a relief rally, or a dead dog bounce, and now we're sort of back to the downside. It's not like we've had a big carnage day, right? But we're only starting the week, right? So just keep an eye on this. It's going to be one of those things that does play out a bit further. If you're looking at the coming back to the cryptos, like, they're not doing much. So you got the daily charts here, right? You can see once again, Bitcoin not doing much. It's coming back, testing resistance. You got Litecoin slightly edging to the top side, and Ethereum as well. But on the big pictures, they aren't doing much at all, right? So once again, the currencies aren't doing much. the cryptos aren't doing much. Equity markets are, and they look like the easiest ones to pick off, right? So I'll be keeping a close eye on that. So when it comes back to commodities, right, let's clear those things there. Of course, oil is a key flavor. These oil charts, the support levels here don't look sustainable to me, right? We've got a couple of support levels here on the light and Brent crude oil numbers. Also the iron ore daily. I mean, that just like commodities have sort of been going through the roof and holding a lot of things up, especially the Aussie Kiwi, right? So just keep an eye on particularly oil, obviously related to that geopolitical event, and just keep an eye on the others as well. You've got a bit of a support line a little bit lower here on gold, same as silver, and also copper. Well, copper's a bit more in the middle of the range. So you've got to be watching oil. It's a news item, right? And it's something tangible you can hang your hat on, as well as the central bank speakers. So when I come back and I'm looking at the overall markets, work out which ones are the easiest ones to hit, right? You're looking for easy trades. You're not looking for tricky stuff. When the majors are like this, right, you got some pairs up, some down, some, and they're all traded. These bottom four are quoted against the dollar as the base, and these ones at the term. So there should be some uniformity here, but there's not. So I'm not going to look for trouble. What I like is equity markets that are getting, even though these are only small moves, getting hit. It gives me confidence to get into those instruments, right? If you're looking for, as I said, the oil trade, this is definitely one to be keeping an eye on. You can see the daily and weekly price fluctuations here of these big oil companies, and I've only just got a couple here, and companies that are associated with oil. There's a lot of movement, right? But that volatility, especially with clear direction, gives you good trading opportunities. So don't forget to look at those. To me, crypto is just at the moment, it's not the major focus of global markets, right? And there's a bit of a mixed interest here across the board on global equities, but the US equity markets, if you're in the North American session or Europe, keep an eye on what news is coming out from the central banks. It is directly impacting the equity markets, obviously related to interest rates. And that's where I think the easiest trades are at the moment, oil and US equity indices in particular. All right, hopefully that hasn't confused you. If it has, post a message up there. I'll try and answer it. But that's where we are. Don't go looking for just your usual stuff, right? Have a look at something like this data page here and work out where the easiest trade is, right? It's as simple as that. Last thing you want to just connect with on that page is just keep an eye on the fundamentals. I mean, we have a big week for sterling this week. See if they're impacting or connecting. And the thing with sterling at the moment, the currency is so far away from anywhere that I just don't feel comfortable getting in with momentum, because there's no clear entry or exit levels. It's just whipping around the place. But that will change and may come with the upcoming data. So make sure you look across the board, keep an eye on the fundamentals, keep an eye on the global markets, work out where the easiest trade is, and you're halfway there. All right, guys, have a good one. Cheerio.